What if I told you that there was a home loan out there built just for you? No down payment, no closing costs, and it could be all yours if you're a first-time home buyer. Sounds pretty good, right?
You're goddamn right.
And I'm sure you'd want to know more about how to get in on a deal like this, yes? After all, you're a first-time home buyer with no cash to spare and no interest in paying any additional costs. So why wouldn't banks be falling all over themselves to offer you an amazing deal just like this? All right, so if you didn't catch the sarcasm in my tone there, then the rest of this might go over your head a little bit. But I doubt that's the case because you're smart enough to know that if something sounds too good to be true, probably is. So let's get real here. Do you really think that banks, states, municipalities, or any of these programs are just handing out money for free? Of course not. There's always a catch. So today I'm going to pull back the curtain on the so-called first-time homebuyer loan, what it is, what it isn't, and whether or not it's something that you and your clients should actually consider. The good, the bad, the ugly. So let's dive in. All right, first off, what is a first-time homebuyer loan? Well, in short, it's a fairy tale. It doesn't exist. There is no specific loan product called the quote first-time homebuyer loan. So generally speaking, there are 5 types of loans that you can get to buy a home: conventional, FHA, VA, USDA, and jumbo. There are also a whole other subset of loans called portfolio products like bank statement loans, DSCR loans, etc. And these are for people who don't fit into the traditional box, meaning that they have some sort of unique income, credit, or asset situation that doesn't fit into the big 5. And typically, if you don't fit in that box, the loan's harder to get and much more expensive. So for today, we're just going to focus on those big 5. And oh, by the way, let's take jumbo loans off the table right away. A jumbo loan is for amounts over about $760,000. So it's not really designed for first-time home buyers. Although in this market, as prices go up, maybe one day it will be. So next we have FHA loans. Now these loans require a 3.5% down payment, no exceptions. They're often thought of as first-time homebuyer loans because of their lower down payment and looser qualifying guidelines regarding credit and income. But you don't have to be a first-time homebuyer to use an FHA loan. So then there's a VA loan, which doesn't require a down payment at all. However, you don't have to be a first-time homebuyer to use it. You just have to be a veteran. So it's not a loan that's available to everyone. Now, what about a USDA loan? Well, this loan also doesn't require a down payment, which is awesome. But the catch is that the property itself has to qualify. It's got to be located in a designated rural area. And this loan also comes with a bunch of restrictions like income limits, loan limits, and lower ceilings on your debt to income ratio. But again, you don't have to be a first-time home buyer to use it. You just have to meet the requirements that the loan asks for, and the house has to qualify. And because of all these restrictions, that's why USDA loans aren't usually widely used. All right, and lastly, we have conventional loans. Now, this type of loan does have an advantage if you haven't owned a home in the last 3 years. Not necessarily a first-time home buyer, but rather someone who hasn't been a homeowner for a little while. And this is kind of going to be a theme here because a first-time home buyer is often classified as someone who hasn't owned a home in the last 3 years. So keep that in mind. Now, some of you might say, see, Mike, there is such thing as a first-time home buyer loan. Well, sort of, but that lower down payment on this conventional loan also comes with some costs. First off, your interest rate is usually going to be a little bit higher. Your mortgage insurance is typically going to be more expensive, and you do have to pay for a home buyer education class, which usually costs anywhere between $50 to $100. So while you might save some money up front from your down payment, you're paying a little bit more in overall costs to get that loan. So when you look at the big 5, only conventional loans have a specific first-time home buyer option that allows for a lower down payment, but it comes with some additional expenses. All right, now let's talk about all of those ads that you see in here from every mortgage company on the planet promising these special programs just because you're a first-time home buyer. Well, the vast majority of these loans fall into a category that we call down payment assistance. So what is down payment assistance? Well, these are bonds and grants usually issued by state or local government entities that, if you qualify, will give you a percentage of the home's cost to use towards your down payment and closing costs. Aha, you might say, there's that free money that you said didn't exist, Mike. But hold on, most of these special programs do come with a cost. First off, you have to meet the program qualifications, which typically include having income limits, minimum credit scores, and purchase price caps. Some even require the home to be in a specific area. And spoiler alert, these areas aren't usually the areas that most people are clamoring to live in, hence the incentive. Next, most, if not all of these programs come with higher and sometimes much higher interest rates than you could get if you didn't use. And depending on the program and the amount of money it offers, the rate increase could range from 0.5 point to as much as 1.5 points, therefore making your monthly payment significantly higher. And these days, many of these programs also come with a payoff penalty. That means if you refinance this higher rate within 3 years of getting that loan, you'll often have to pay back all the assistance that you received. So you're locked into that loan for at least 3 years unless you want to pay off all the benefit that you got from it up front. In other words, again, it's not free money. And by the way, every single loan that you do is going to have closing costs, appraisals, title fees, surveys, insurance, etc. Someone in the transaction is paying those costs, whether it's you, the seller, or the bank on your behalf. But if the bank covers it, it's not free either. They're going to charge you a higher rate to offset those costs. And again, most of these programs don't even require you to be a first-time home buyer to have access to them. Okay, now to be fair, there are a few programs out there that don't raise rates or don't have a prepayment penalty or don't have tight restrictions on your home or the home's qualifications, but never all three of those together. And these loans are few and far between and usually don't last very long on the market. Often they're what we call Community Reinvestment Act or CRA loans. So CRA loans are offered by banks to support low-end and moderate income individuals in neighborhoods. They often come with lower interest rates or down payments as banks aim to meet federal requirements for investing in their communities. And by offering these loans, banks can improve their CRA ratings, which can affect their ability to expand and operate more branches. But again, these loans are usually very specific about who they can offer them to and often only last for a short amount of time. It's kind of like finding a leprechaun under a rainbow. It can happen, but not everybody gets to see it, and you better move fast because they disappear quick. Now, I'm sure someone out there will bring up a specific loan from a specific bank in a specific area that could be considered one of these unicorn loans. But my bet is that if I could dig into the fine print on that loan, I'd find something that makes it not quite as amazing as advertised. So bring them on. Let me see. But this gets to the real crux of the first-time homebuyer issue. While there are programs out there to help people who need assistance due to lack of funds to buy homes, like here in Texas, we have the Texas Department of Housing and Community Affairs, or TDHCA, and it's offering a program like My First Texas Home Loan, My Choice Texas Home, or we even have the State Affordable Housing Corporation, which is what we call TSHAC, offering assistance programs tailored to first responders, teachers, and veterans. There's also something called the Southeast Texas Housing Finance Corporation, or SETH, that offers down payment assistance like SETH's 5-star Texas Advantage program that provides eligible home buyers up to 5% of the loan amount to cover down payment and closing costs. So these things exist, and these programs can be incredibly helpful for someone who hasn't been able to save enough for a down payment and closing costs, but wants to stop renting and throwing money away every month. And they exist for that very reason and have helped thousands of people achieve the American dream of home ownership, but they aren't free money. And any bank or salesperson that pitches it that way is being disingenuous at best and outright deceptive at worst. So is there a first-time homebuyer loan out there for you? No. Not really. Are there special loan programs that can save money out of pocket today and help you stop renting and give you a shot at home ownership? Yes, there certainly are. But are there some magical loans out there with no costs, no down payment, and no restrictions, and anyone can apply? Absolutely not. So these programs can be helpful if they're used in the right circumstances, which is why it's so important to talk to a lender who's going to give you the truth and lay out all your options so you can make an informed adult decision about what's best for you and your family. Now, there might be a rare, well-advertised loan product that seems to check all the right boxes. I've seen them. They do pop up from time to time, but they are rare. And more often than not, they have some sort of a catch or unattainable requirement in order to qualify. And usually they're just chumming the water to get you and your clients to pick up the phone and call, only to end up with a regular FHA or conventional loan. Because at the end of the day, that's what they all are. A regular old home loan dressed up in a pretty marketing slogan to make you feel special. Because after all, it's your first time. So why would they take advantage of you?